much, Mike, for agreeing to be with us today. This is our next podcast edition of the Unheated Podcast for Thea Ventures. We're an early stage climate tech fund based in India, investing across decarbonization technologies. And we're so thrilled to have you here representing the engine. Just a quick background on the engine and on yourself. The Engine Ventures and the Engine Accelerator are bridging the gap between discovery and commercialization for breakthrough interventions and accelerating the pathways for tough tech founders and companies. The mission is to address the planet's most challenging problems and create a positive impact on society and the environment. Tough tech is a transformational technology, as I think you've defined it, and cutting edge science and technology which has a potential to change the trajectory of society. So, the Engine Ventures, which I think Mike heads up, is a venture capital firm investing in the next generation of tough tech companies who are solving challenges in climate tech, human health, and advanced systems and infrastructure. And the Engine Accelerator is a public benefit corp that supports the next generation of tough tech with the space programs, services, and community needed to scale. A little bit of Mike's background. Mike is a general partner at The Engine, where his focus includes investment across climate, advanced computing, and human health sectors. And he currently serves as a board member for The Engine Ventures portfolio companies, VEIR, Mantle, Osmosis, and Copernic. Mike also co founded Blueprint by The Engine, which is a program that allows tough tech graduate students, postdocs, research scientists, faculty members, and their teams to explore the commercial opportunities of their breakthroughs and startup projects. Before The Engine, Mike was an executive director of the MIT Roosevelt Project, and he has a PhD from MIT, where he trained as an economist, a master's in science in technology and policy from MIT, and a BA from Williams College. So thank you again, Mike. Such a pleasure to have you here.
Priya, thank
And
you for having me. I'm really excited for the conversation, and yeah, look forward to digging in.
Wonderful. So just to kick us off, it'd be great if you are able to tell us a little bit more about the engine, the thesis and the focus areas, and its positioning as a dual entity, both being accelerator and a venture investor, and what type of startups do you generally look at investing into?
Yeah, so I think it helps us go back, if we go back in time about 7 years. And the president of MIT, Raphael Rafe, at the time, had acknowledged that there were a lot of breakthrough innovations taking place at MIT and in other academic settings across the world that were not translating from the academic kind of research setting into commercial reality and ultimately toward impact in toward world problems. And one of MIT's core missions is on impact. And I think that the academic community recognized that that wasn't happening. Our research, we were pushing the boundaries of science and the boundaries of engineering, but we were not getting things into the commercial realm where true global impact could be had. And so Raphael Rafe asked the question of MIT faculty members, what could MIT do as an intervention to actually make the case for more translation and building more impact across the world? And the output of that work was the formation of the engine. And this was in 2016-17 when the engine was announced and formed as a kind of, I'm going to say, as an experiment to figure out how you could change the distribution of returns on innovation. And that experiment had a stool with three legs, right? The first leg was you had to change the way capital was provided to these companies in the early stages of translation. I may come back to that on the venture side. The second was you needed to have a location and access to space and equipment and programming where these companies could go on day one. And I'll get back to that as well. And then the third is you had to surround these companies with the stakeholders they needed to be successful in the very early days. So if we take those three things, those are the three legs of the stool upon which the engine has been built, where you can accelerate the pace of experimentation in the early days of company formation and that translation moment, and then get companies out and into capital markets where they can raise a lot of money and move toward global impact. So that's the origin. And I think MIT and Raphael Rafe deserve a lot of credit for that because they set up this institution without it being captive to MIT. So the engine supports innovators across the United States, um, both on the venture side and in here in our facility in Cambridge, Massachusetts, drawing in tough tech teams from all over, and creating a movement and a ecosystem that builds upon itself and can be self-sustaining in time. So a little bit on the venture side, we have two. We're now 7 years in. We've got about 55 portfolio companies. We've invested across, as you mentioned before, climate change mitigation, human health improvement, and advanced systems and infrastructure. So that's think semiconductors, photonics, mobility, built environment, space, robotics, that bucket. About equally across. I actually think they're all very interconnected. Recently, I think it was in Science Magazine. It was like, climate change is a human health problem. And the connectedness of all of it. Obviously, the advances in AI are great. They're also very energy intense, and increasing our demand for energy in orders of magnitude over the next 10, 20 years. All of it's connected. And so we see that as kind of tough tech as the intersection of all of that. On the infrastructure side, we have about 300,000 square feet of space. These are biolab, chem lab, machine shops, imaging equipment. I would say it's like 95% of what these companies need to come from a academic lab or research setting and pop over and start a company and get right into your experimentation. Maybe just one anecdote. When I prior to the engine, I helped launch a grid scale energy storage company called Ambri that has a footprint in India and investors from India. We at the time, it was 2010, and it took us a whole year just to set up our lab and replicate experiments that we had achieved in the lab at MIT. And that level of that experimentation cadence is not sufficient for any real investor conversations, right? They want to see faster. But more importantly, and kind of if you abstract away from the investment side, that pace of experimentation is not enough to make a difference in the world. And particularly not on the climate crisis. So I think that today, if we started that company, we would move into the engine, and on day one, we'd have replicated those results. And so that's part of what this is all about. It's just trying to accelerate these companies in the earliest stages of company formation.
Super. No, thank you so much for that very extensive background, and thank you for sharing the specific examples as well. So, if you kind of look deeper into, the commercialization piece, going from lab into, actually building pilots, meeting customers, and actually getting those innovations out there, what are some of the challenges that these companies face? I mean, they have to ultimately go through quality control and quality assurance tests, make sure that they get the product absolutely right, product market fit before you're rolling it out for customer application, industrial application, as it were. And do you think that, if they go too fast, perhaps that, there can be a few hiccups along the way? I mean, these are very deep tech sort of products, etc., that have never been built before. So how open are customers to basically taking these up in their very almost raw form?
Yeah. This is a really good question. I'll abstract a bit and then we'll get into some details. I think at the core, when I think about our portfolio and tough tech in general, and this is absolutely true for climate, there's at the inception of a company, there are a set of risks that these companies face. There is technical risk, of course. Does it work? There's scale-up risk. If you can make it work, can you make more of it, and can you make it in larger scale? That often involves innovation on its own. There's regulatory risk in almost every single field we invest in, definitely in climate. And then there is the market risk that you're mentioning, and a set of risk-averse customers, and how do you get into kind of their operations. That those four things are all complicated and hard. It is also what distinguishes this field from software, where effectively you are leveraging existing techniques to go de-risk market stuff, whatever. I think what it means for a tough tech company is you've got to begin to embed all of those functions in your company very early. And because seeding kind of regulatory pathways is a long time horizon process. Engaging with those customers is a long time horizon process. And as a result, you are often beginning to do that prior to hitting your technical metrics. I think the most important thing as you're doing that is that you're transparent and clear and operating with, knowing what your North Star is and where you're going, but and selling that vision while being honest about where you are on the technology side. I think if you are doing that, the thing that has changed the most in the markets, it needs to continue to change, is the engagement of customers with early stage companies. And we are seeing more nuance, more understanding and best practices around how do large companies and small companies partner. And I think this challenge of getting things into market quicker is part of what I think motivates me in across the board. Work in our climate needs to be a whole team effort across types of organizations, because the things you mentioned, quality assurance, quality control at production, at scale, there's a set of firms out there that know how to do that pretty well. And if you can leverage that, that's really productive for your company. And we're starting to see that now. There's high degrees of variability among those players on their ability to do that. But I actually think as we're moving toward a world where the demand for clean energy far outstrips the supply across technology verticals, those players must figure out how to work with these early stage companies that have yet to scale, because if they want to hit their goals and in the next decade with a set of companies that are going to be supply constrained and just by the nature of pace around scale up, if you're not working with them today, you can't be talking about progress until 2035. And that's beyond a lot of the commitments that a lot of companies are making. So I think there's a lot of progress toward this type of partnership being successful, but we've got to start to see real engagement as we shift from pilot demonstrations into big projects.
Got it. Got it. Oh, thanks a lot. I think I couldn't agree with you more. I think having all hands on deck on a team effort to basically make these companies viable for industrial application, and then having these industries actually looking towards startups to help them reach their net zero goals a lot faster is absolutely crucial. So, having said that, how do you sort of curate the list of, I mean, the kind of customers that you're bringing to the engine in terms of, connecting them to the companies? Is it mainly the energy oil majors, or are you also looking at companies in FMCG, or in, I know you work in the health space as well, but specifically on the climate side, are there sort of some favorite customers that always come to the engine and want to kind of wolf up a lot of these startups for their own kind of customer relationships?
Yeah. So a couple things. I think first, you mentioned that we also work on the human health side. I think that just to put a pin in that, I think it's very important, because the maturity of that marketplace is far exceeds where we're at with climate in terms of how startups and corporates partner. And that's because they've been doing it for 20 years. And it is a well-oiled machine, no pun intended, on that side. And actually, I think that we are moving in that direction on climate, where the nexus of competition is around innovation. About 20 years ago, that's how the biotech majors, they kind of figured out our ability to compete is on the innovation side. And that meant we're going to partner with more startups. We're going to buy more startups. We're going to invest in more startups. And that has played out. The capital markets, the capital stack for bio is very healthy. It's diversified, and the exits followed that behavior. And I think that's instructive for us on the climate side. And we're beginning to see that the nexus of competition is shifting toward innovation. That's a good thing. We're beginning to see a lot more investment from majors, from I'm going to say strategics, into these types of companies on the climate side, where non-traditional investors represent a more than majority of the capital stack going into climate today. That's really positive. I think for the long term. You got to be careful on the cap tables and everything, as I think is pretty clear for the companies on what that means. But for the long term, I think that's really positive, because from there you get acquisitions and then you get IPOs to follow. So, which is where how our capital stack needs to mature as well. To answer your specific question, there's high variance, and so I don't have this company is great, this company is not great. It depends on the industry. It depends on the technology category. There's a lot of variability in there. And I think that, as there should be, I think, and everyone's still learning best practices about how to partner, how to deploy, how to work together. And I think that's positive. The one thing that differentiates, and I think it is perhaps unsatisfying, but it is the reality. And I was at a conference last year, and it was CERAWeek's coming up in a couple weeks in Houston, and saw one of the major. It was a panel of CEOs from the majors, a variety of them, and they were, talking about what they're doing or what they're not doing and why they're not doing it. And one of them just made the very clear point. This was one that's particularly active in the energy transition. Was like, look, it just takes courage. You've got to have the courage to go work with these companies to actually deploy the technologies and drive down the costs, because that will be at scale. And so there is a cultural piece that really matters. And I think that if we're going to hit our goals, both as a society and then individually for these companies, that's what it takes.
Yeah, absolutely. No, couldn't agree with you more. So I think that's really interesting on, basically the matchmaking that what you do between the companies, the startups, and then the corporations. I'm also curious about your relationship with universities. So I think you've mentioned, or at least we've read about programs like the Blueprint and Whiteboard, which are, heavily focused on research to commercialization and scale. And also you work with MIT, and curious to understand how you blend that university level talent, the scientists that kind of come in to maybe the engine accelerator or the program, and how that entire sort of setup works.
Yeah. So I think the first thing to note is that, like, this class of innovator has been systematically ignored in the broader entrepreneurship literature of, like, how do you start companies? What do you have to do? Even the the National Science Foundation here in the U.S., they have the I-Corps program, and that program instructs scientists to go out and talk to 100 potential customers. But getting back to the set of risks that these companies face: technology, scale up, regulatory, and market, all of that stuff really only addresses one of those four, and that is on the market side. And I felt this as we were starting Ambry. I was like, what can I read to think about how do I build a new grid scale energy storage business when that market did not exist? And as an asset, it wasn't valued. We didn't know how it was going to be valued. The markets had not evolved to actually take that into consideration. And the energy markets are highly regulated. So those were all, we were starting from blank slate, and there was not a lot to do. I then recognized at the engine, we were meeting with a lot of academic researchers who were asking these same questions. And so we do a whole bunch of whiteboarding work with these teams, just to put together, like, the plan for how you would de-risk those four categories in time. And we founded Blueprint with the goal of generalizing that, and recognizing that this category of innovators, like, there is a set of, as if we're going to make the venture capital model work for these category of innovators, you've got to be accelerating the de-risking of all of them simultaneously and quickly. How do you begin to stage gate those milestones? And so we started Blueprint in 2020. We had 20 teams in the fall of 2020 come through the program. We've run it every 6 months since then. So we're about to do our 8th cohort of Blueprint in this spring. And we've had about 600 different teams come through in that time. And these are all postdocs, PhD students, people who are doing research on something they think could change the world, but are not sure where to begin. And two things. I think first, there's nothing that actually gives me greater hope that we're going to be able to solve these problems than that, because I think they're all probably right. And then how do you put them into a position to do that at the engine? That's kind of what we wanted to do, was set up a program where they came out of it with the set of questions. They're not going to have all the answers, but they're going to know the set of questions they've got to be asking themselves in time about how to get this thing into the market and toward impact. And it's a pretty light touch program. We run it over 5 weeks. It's less than a day a week. It has been really fruitful, I think, for the community here. Now we've got a whole bunch of innovators who want to start companies in the space, and we're really excited about that. We do the same. Whiteboard is a similar iteration of that, but specifically for faculty members who are thinking about how do they angle their lab to be more commercially minded, right, while preserving the academic integrity of what they're doing. And I think that there's more interest in it today than there has been. The other thing to note with both of those programs is that the set of frictions related to translating new ideas or ideas out of the academic realm are much broader than just capital and space. There's a bunch of social frictions related to gender and minority backgrounds that the data is very clear. They are underselected in translation. And part of that's about access, about know-how, about the incentives within the academic realm, all of which need to change. And, we're trying to do a little bit to open up that aperture to make sure that the best ideas are coming out. I think just as generally, if that's not happening, then we're failing across the board. So that's another reason we're particularly excited about those programs.
Great. Wonderful. And do you also work with faculty at MIT or any other universities in the Cambridge area? Or are these programs affiliated with the universities?
So we run these programs independent, and we work with those faculty to come into. So it's not just for MIT or just for Harvard, both of which participate. We actually work with institutes across the United States today, and would look to expand upon that on a go-forward basis as well.
Okay, great. And when you're following these companies as they sort of leave, the accelerator, and then the Engine Ventures has invested in them, and then they raise follow-on rounds of funding. What kind of successes have you seen going forward? You mentioned that there's a path to IPO or M&A, for these companies later on. What are some examples of some companies that have really hit it out of the park and have done exceptionally well, and that you hope can be a blueprint in itself for future companies coming into the cohort?
Yeah. So a couple things to note. I think one is that it's still really early, right? So within climate, there are immense tailwinds for what these companies are doing. I don't think there's been a better time to start a climate tech company than today, and I mean that even compared to 2022, where there's more capital. I think today we are there. The confluence of things I mentioned, the supply-demand gap for clean energy is one, but you have in the United States the IRA. In Europe, you have an equivalent set of factors coming in, and then you layer that those are opening up trillion-dollar markets. You layer on top of that the carbon reduction and abatement commitments from the corporate world. That's another trillion-dollar market, I think the AI piece as an accelerant to more energy being needed, but under strict, I think, demands that it is clean. those are moving markets forward in a really productive way. Markets for electricity, for hydrogen, for carbon capture, and all of the electrification of transportation, all of it is getting pulled forward in a way that didn't happen before. And so that's really good. It's still early. Those markets, many of them are just being created today, right? And that's true for the in hydrogen here in the U.S. The production tax credit for hydrogen, the initial outline of what that looks like, 45V from the Treasury, that guidance came out a month and a half ago, 2 months ago, right before the holiday. So it's still really early, but it is going to drive top line growth for a lot of companies in the next 5 to 10 years. And so I think that there are really good reasons that are pulling these companies into market. We're beginning to see activity on the M&A side around this. You saw Carbon Engineering's $1 billion acquisition by Accidental, and a few others. Some of the largest, I think, there are in public markets today. Like, not to over-index on one or two companies, but NVIDIA is an advanced systems company that has a $2 trillion market cap. Tesla's up next with, one of the largest market caps in the world as well. We can debate about whether either of those make sense, but that's where it's at. And those are the proof points where these companies are going in time as those markets are created going forward. And I think that's really exciting.
Great. No, I think you underscored a very important, point there. It is still early, but there are multiple trillion-dollar markets opening up across the board. So definitely very exciting to see that. On the flip side, though, given the climate is a new and emerging and, in a sense, a really hot topic, there are always going to be those opportunists who want to enter into the space because it's exciting, and obviously they think there's some kind of price arbitrage or a larger economic opportunity they can take advantage of. And we saw this a little bit in the carbon offset market, where multiple companies were being scrutinized for the type of credits that they were actually claiming to deliver in different markets, and then corporates being sort of disengaged or disincentivized because of the veracity of those credits was questionable, and there were all these middlemen. So I know you obviously don't deal in platforms and software. Your focus is more on tough tech, but do you see that, given that this is such a that you mentioned immense tailwinds moving towards this sector and pushing it forward, that there's still possibilities for some kind of headwinds as well, given that what happened in Clean Tech 1.0, or some sort of folks that might be in this for the wrong reasons, perhaps, or creating business opportunities here. And do you see that as a risk at all?
Yeah. All right. So there's a lot there, and I'll try to address all of it quickly, at least some moderately quickly. The first, let's just talk. I mean, I think the differences between Clean Tech 1.0 and today are there's fear there. It is irrational. What has changed in the last 10 years is immense in terms of the maturity of the capital stack, the amount of capital. I raised money in 2012. We were orders of magnitude less money flowing through the climate economy then than there are today, from the venture side alone. Not to mention on the growth side, there's a new $1 billion+ growth fund announced like every week. So we are in a completely different realm, and those fears are actually just not looking at the data. So I think, what should we be worried about? And there are things to be worried about. The first is how we finance early projects and scale up growth. While there is a lot of capital out there, it's not clear to me that the incentives are rightly aligned. Where growth capital, typically you're looking for a floor and a 3 to 5x return. That means you cannot sustain a zero on your balance sheet. And so anything that has binary risk is out. But until you demonstrate something at scale, I actually believe a lot of climate tech companies probably have some degree of binary risk. So that match has got to evolve. Now, competition is a beautiful thing, because you see a lot of growth players coming in, and they're going to have to start coming earlier and getting a little bit more comfortable with that risk, and if they want to get into those deals. And so I think that's part of how that plays out. The strategic capital is another way that will play out, because they know how to run those experiments and are comfortable running billion-dollar experiments. And I think that so that's one. There's headwinds there, but I think in a world where the capital markets are mature, you can get through those in creative ways. So that's number one. I think the longevity of the markets is number two. So you mentioned kind of I'm going to say, nefarious behavior around carbon commitments and offsets. All fair. I think all fair, but also on the margin for the most part, given how early we are, right? And the opportunity for large scale carbon abatement is not there. Like, those companies are not there yet, and so you're gonna see two things. You're gonna see people testing new things and trying to make those work. That's good. You're also gonna see people trying to take advantage of the system. I think that those frictions appear in any time you're developing a new market, right? I feel like that's just true in economic history. So, and then the market changes and it fixes, and you've got more oversight, and then you understand what you're looking for. I think that is where we're at, and we'll continue in the next 5 to 10 years. So I think that I'm less concerned about, particularly as, from our perspective, we are investing for a long period of time, right? I mean, we're looking at the energy transition at completion 2035, 2050, right? That's the thing that I care about. Are we making progress there? And I think we notably very much are. I think on the innovation side, that being said, the speed with which these markets are developing is both interesting, and I think it does change the work that startups need to do. So I think hydrogen is a really good example, where today in the United States and elsewhere, the incentives are to go build large hydrogen facilities, and you need access to clean power for that, and those regulations are being made, but the production tax credit is immense. It's $3 a kilogram, and that changes the work from, you can't be a technology developer at this point. You need to execute into that market, and you need to do it today, because the window is the window. So that is one of the things I worry about on the innovation side. And the other thing that people ask often is around the longevity of these markets, because there is policy involved, and who knows what happens across the world this year with a whole bunch of different elections. Energy is too big for any one administration to really change in some substantive way. The broader arc that we are on is quite clear. From 2010 to today, we have made massive strides on vehicle electrification, on renewable. I mean, almost 100% of new power in the United States is renewable, right? And that was from half a decade of the Obama presidency and then half a decade of a Trump presidency. So like that arc is very clear. And then the other piece is that the new markets, like the ones that are best positioned to take advantage of those new markets, are incumbents. And so I don't see them advocating that they go away. And I think for that reason, I have quite a bit of confidence that we're on a trajectory that will maintain into the 2030s.
Awesome. So great to hear about your optimism there. And I'm really sort of gunning for it myself as well. And I think just, as we're drawing this conversation to a close, wanted to sort of understand your perspectives on the emerging markets. So, we've talked a lot about the US and Europe, the IRA, and then several sort of, carbon negative sort of policies that are being imposed in Europe to sort of encourage, zero carbon practices, etc. But as you look towards, the global south, so so particularly India, Africa, LATAM, Southeast Asia, etc., and East Asia. What kind of opportunities do you see here in terms of talent? And you mentioned Ambri as you lived in India and you sort of helped to launch this company here. Do you see any particular, I would say, advantages of launching companies in the global south that you may not get access to in countries like the U.S.? Obviously we still have to catch up plenty to the U.S. in terms of technology prowess and the R&D lab spaces and commercialization, so time to commercialization, etc. But it would be great to hear if you see any particular advantages with investing in this region and any sort of clarity that you see coming from the space.
Yeah. So I think that in order to solve anything to do with climate change, this is the question. It is, how do we decarbonize those markets that you just mentioned? Because all of our goals run through India, run through China, run through Africa and Latin America. It's the rest almost is immaterial if we don't do that. That means we've got to work on technology transition to those markets. We got to build partnerships on the ground with investors and with partners to deploy in those markets, whether it's on a joint development basis or just a subsidiary basis, whatever. That is it is imperative, and we can do whatever we want to do up here. It's almost meaningless if we can't approach those markets. I do think it is happening. I've got a colleague who's at a board meeting in Brazil right now. We've got a company that does a lot of work down in Chile and Argentina, and I think there's really good reason for developing stronger ties economically between those countries and ours, and India similarly so. I think that one of our partners is the International Finance Corporation, and talking about how do we get projects built in those markets faster than would otherwise take place is core to the work that we have to do. I think it's again still early. And best practices are being developed now, but it comes with the things that work are where you have coalitions of organizations that are strong and work together. And you need both government support, you need local corporate support, local labor, and the technology provider and wherever that technology comes from. That's true here as much as it is in India, as much as it is in Africa. But it is about those coalitions, and you can't develop major energy or climate projects without them. I think, and it's all of them. I think in the past these things have failed where groups have been marginalized or not included, and the coalition's not complete, and that leads to lots of bad outcomes, socioeconomically and from a climate perspective. And I think that the way that we do this on a go-forward basis needs to be different. And I know there are a lot of people who are thinking about that and doing it productively today, but it's still on a one-off basis. It's not collective.
Understood. No, I think there's a lot of action that still needs to be taken, but very encouraging to know that, the view is that we need to include these markets in the overall energy transition. It's imperative. So thank you for sharing this, Mike, and thank you so much for such an enriching and energizing conversation. Really enjoyed having you here today, and look forward to more collaborations with the Engine and with Thea Ventures, and look forward to seeing you soon.
Likewise, Priya. Thanks so much for having me. It was really, really fun to chat, and always excited to host you when you're here in Cambridge soon.
Yes, absolutely. Thank you.